Hi everyone, Joe Vitale, American Retirement Advisors with the Graded Investments Weekly Talking Points for August 27th, 2021. Let's talk about stocks. Equities surged last week on reports of strong economic data, continued demand for manufactured goods, and Federal Reserve decision to continue to support bond markets into the fall. Keeping rates low, in essence, is what's happening. So what happened, the S&P gained 1.54%. The Russell 2000 was boosted by 5.06% last week, and the NASDAQ added 2.82. Now, overseas markets were also strong, with the international developed markets, which is the EFA, rising 1.86%, and the emerging markets gaining 4.29%. Now, within the U.S., small caps outperformed large caps, and growth outperformed value. And they've been going back and forth all year. Value's been leading the way mostly, but you're seeing growth come back and forth. Techs are already up this week, so we're starting to see the growth come a little bit higher. So energy and financials were the best performing sectors, while utilities and consumer staples were the laggards. In fixed income, the Federal Reserve ended its annual Jackson Hole Symposium with a notice that Fed will continue to buy bonds until later this year, and that interest rates are likely to be not raised for some time. So interest rates declined from their midweek highs, but closed the week slightly higher than prior Friday. The benchmark 10-year Treasury yield was up to 1.31% on Friday, up 5 basis points for the full week. Now, commodities, natural gas reached a 3-year high on Friday. Why is this happening? Reaching $4.38 per BTU, up 86% year to date. Why is it up 80? I don't know. I have my theories. I will not say. Rising last week on expectations that production would be cut by Hurricane Ida, along with a report that gas inventories grew less than expectations. In general, production of natural gas has declined with the decline in the U.S. oil production, since gas is a byproduct of that process. Additionally, more gas is being shipped overseas as liquefied natural gas, or LNG. Now, I don't understand this, but all I am telling you is this: it's not right. So, hopefully we should see that come down. There's no real reason for natural gas when we've got a ton of natural gas to go up 86% this year. Now let's talk about the U.S. economy, growing 6.6% during the second quarter, ended in June, in line with expectations and slightly higher than the prior estimate of 6.5%. The fastest growing pace reflected somewhat stronger consumer spending and exports than originally reported, and was viewed positively. Now, the Eurozone business activity expanded at nearly its fastest pace for 15 years in August. Business optimism about the future rose, which was near its high level since the survey began in 2012, with impressive momentum. Now, the survey also recorded a strong hiring activity at a 21-year high. Company news, we call it Palo Alto Networks, which is a core-selected G33 holding, last week rose 25.5%, following quarterly results and management guidance for the upcoming fiscal year that were well ahead of expectations for that security software company. And then travel, entertainment related stocks like Las Vegas Sands, which is a contrarian choice holding, and Darden Restaurants, Travel Leisure, Southwest Airlines, all contrarian and core selected G50 holdings, rose between 7 to 17% last week, based on the easing of past business restrictions, which is what we talk about. You know, it's just, if everything can open up, we're going to see just profits go up, people are spending money, of course stock values go up, your accounts go up. It's all wonderful if people can get back at it, right? So that's it for today. So thank you so much for being a part of our family. We're very thankful to have you. And of course, if you have any questions, please give us a call at 855-756-5700 or visit us at aradvisorsinc.com. And God bless you. We'll see you next video.